Hello and welcome back to the Crypto Club podcast, hosted by myself and Mr. Hobo. Say hello, Hobo.
Good morning, everyone. Good to be bringing you guys another episode of the Crypto Club. We have been quite busy at CoinScan, pushing a lot of exciting things. So we're happy to finally be able to return to the Crypto Club podcast and resume our weekly sessions.
Yes, long time coming, but we had to definitely take some time and work on the platform, which we'll touch on towards the end of the episode, as far as give you guys kind of like a update of what's going on, where we're at, what's coming. So stay tuned for that. In the meantime, let's talk about the pretty nice August rally we had. In the meantime, we haven't done a podcast episode in like 2-3 weeks. So
Right.
While we were working on the platform, we actually saw like a really nice rise, not only in the stock market as well, but also in crypto.
Right. Yeah. I mean, from the initial, I want to say this 17th of June was the initial Russia FUD, and that was a temporary bottom. I mean, we rallied up 43% since then. I mean, of course, this last week or so, we have fallen back down to, down to the 21,000 range. But still quite the nice rally from where we were. And we'll see whether this trend can continue, or if we follow out this bear flag like we did in the previous rallies. But surely has been nice to see a little bit of green in our lives, And if we take a look at stock markets, the Nasdaq, quite a big rally here, rejecting off of this, but some huge movement from the bottoms of these charts. Same thing with SPX. Let's see, from 3650 all the way up to about 4300. So some big rallies. We'll see if we're really turning around or if this is another bear market rally. But regardless, we're here to stay.
And markets move up and down. There's cycles, and for the most part, like Hobo mentioned, the team at CoinScan is here for the long term, as any smart investor should be, right? You can short-term trade all day long, but the biggest and best, traders in the world play long-term. So
right,
there's something to note.
I mean, looking at the Ethereum chart from the bottom on the 18th of June of 871, we rallied 130% up to just touching 2K the other day. So
Yeah,
some big movements. I mean, you can spot trade and make some good money.
yeah, you definitely can too. It's a good thing to have some balance and do both. But I guess what I'm more so saying is the really large, trades that yield the most are typically the ones that are, longer than a few months time span.
Right. Yeah, but it kind of gives you guys an oversight of where we are in the markets. We can take a look at some altcoins here. ADA, not doing so hot. ADA's been rather disappointing throughout these rallies, I would say. And then Matic moved huge. Let's see. Yeah, I mean, down from 32 cents up to $1 during this rally.
That's huge.
That's a 3x on Matic right there. But yeah, we'll get on to our first story here. So stocks snap 4-week winning streak. U.S. stocks snapped a 4-week winning streak on Friday as all three indexes closed lower on the session and on the week as the summer rally lost momentum. When the closing bell on Friday, the tech-heavy Nasdaq was down 2%, while the benchmark S&P 500 was off 1.3% and the Dow 0.9%. For the week, the Nasdaq dropped over 2%, the S&P over 1.2%, while the Dow's weekly losses were just a modest 0.2%. So the biggest stock story of the week came to an eventful conclusion on Friday as shares of Bed Bath & Beyond crashed, falling 40% after GameStop Chairman Ryan Cohen sold his entire 11.8 position in the company during Tuesday and Wednesday. Cryptocurrencies were also in focus on Friday, with Bitcoin falling around 8% to trade near 21,500, its lowest level since late July. The price of Ethereum was also down more than 8% to trade below 1,700. Like stocks, crypto markets have been enjoying a summer rally after bottoming mid-June. And the WTI crude oil futures settled little changed on Friday, losing 0.2% to settle at 90.29 a barrel. On Tuesday, crude futures settled at their lowest level, 86.53 a barrel since January 25th. In individual stock news, a collapse in shares of Bed Bath & Beyond was the big story on Friday, with the stock down around 40% after GameStop chairman and activist investor Ryan Cohen disclosed on Thursday he exited his 11.8 position in the company. I mean, I don't blame Ryan Cohen. Bed Bath & Beyond pumped huge. That's not to say it won't pump some more, but it's a short squeeze situation just like it was with GameStop. We all know those are not sustainable. So,
see, you should pull up the chart. I want to see what kind of impact that had on the price.
See. Look,
BBY rallied super hard though. Like
from
it was
450 to 30 down to 10.
Wait. See that. On GameStop?
No, Bed Bath Beyond.
Yeah.
So, yeah.
Oh, you're saying from $4.50
right.
to
$30 down to $10.
Yeah, crazy. Wow.
All within the course of like 2 weeks. So, yeah, a lot of volatility there. See, Bloomberg also reported late Thursday that Bed Bath & Beyond has hired Kirkland & Ellis, a law firm known for its work in bankruptcy and restructuring situations, to help manage its increasing debt load. The week's rally in Bed Bath & Beyond reignited the meme stock trade that has periodically swept markets since January of 2021, when volatile trading in GameStop and AMC made national headlines. Even with Friday's collapse, Bed Bath & Beyond shares were down 15% this week and are still up more than 120% over the last month. Retailers also remained focused on the earnings side on Friday, with shares of Foot Locker up more than 20% in early trading after announcing quarterly results that were better than expected and named a new CEO. Foot Locker's same-store sales fell 10.3% in the most recent quarter, less than the more than 14% decline expected by analysts, while earnings per share of $1.10 topped estimates of earnings of 80 cents. The company expected same-store sales will fall 8 to 9% in 2022. Previously, Foot Locker expected same-store sales to drop closer to 10%. Mary Dillon, formerly CEO at Ulta Beauty, was announced at Foot Locker's next top executive, effective September 1st. Also on the retail side, shares of Wayfair were down more than 16% after the company announced plans to about 900 employees, including 5% of its total workforce and 10% of its corporate team. Earlier in the week, Walmart and Target offered results that allowed investors to breathe a sigh of relief regarding the state of the consumer, with big box retailers offering quarterly results that were better than feared. As Walmart CFO John David Rainey told Yahoo Finance this week, I'd say that we're seeing is consumers are still relatively healthy. Shares of Occidental Petroleum were also on the move this Friday, rising as much as 9%, following reports that Warren Buffett's Berkshire Hathaway received regulatory approval to acquire as much as 50% of the company.
Oof.
So, yeah, stock's seeing some movement. A lot of volatility, which I think is natural for where we are at just economically and in the market. Going back to these trend lines on these indexes, they come in and touch that, they're either going to spike through the trend line or quickly reject off it. So tend to see some volatility around these areas.
Yeah, some huge volatility. And
Mm-hmm.
you've got a chairman dropping, 11%. That's crazy.
Yeah.
And I mean, yeah, Bed Bath and Beyond went super crazy. Yeah, and then a 10% pump in petroleum is also huge. I mean, these are like, it's crazy to see stocks becoming more volatile.
Right.
Um, Especially like compared to crypto, they're generally, you know, a lot more stable. But it goes to show you kind of like what kind of market we're in.
Right. I mean, I just pulled up the DXY chart here, which is the dollar index, and
Hmm.
typically when the DXY is moving up, gold and Bitcoin like to move down. Um, and earlier we got pretty high. We got to 110, then we cooled off down to 104. But I mean, we're charging right back for that local all-time high, right? 108 currently.
Hmm.
But yes, a lot of strength in DXY right now.
Yeah. Well, I think part of it too is a lot of people are talking about the incoming collapse of like the Chinese economy,
Yeah.
which is definitely strengthening the dollar because 6 months ago everybody was saying that the Chinese yuan was going to become the next world reserve currency, and people were going to that and abandoning the dollar short term, and
Right.
it looks like that didn't pan out at all.
Yeah. I mean, imagine that, something that China wants not panning out.
Yeah.
But yeah, let's go ahead and get on to our next story here. So, Brazil's largest investment broker to offer Bitcoin trading in August. Um, in partnership with NASDAQ and BitGo, XP Inc. will offer Bitcoin trading services leveraging cold storage custody solutions on a new platform. Um, Let's see. So XP Inc., the largest investment brokerage in Brazil by market value, will allow some customers to begin trading Bitcoin next month, according to a report from Reuters. XP will list Bitcoin and one other cryptocurrency on its cryptocurrency trading exchange, XStage, by mid-August. The broker plans to expand its product offerings by the end of next year. The company's director of financial products, Lucas Rabicini, said, per the report. Institutional cryptocurrency from BitGo was selected as XP's custody partner for XStage. BitGo offers institutional-grade cold storage multi-signature wallets to safeguard assets while offering insurance on assets held on the platform, as well as self-managed cold custody solutions. Initially, XStage will reportedly not support withdrawals or transfers of Bitcoin. XStage was first announced in May and became available exclusively to employees in early July. XP mentioned the quick timeline was in part due to the growing competition from other financial institutions entering the ecosystem, such as Nubank, i2, Unibanco, and BTG Pactual. There are competitors doing their homework, some pretty competent ones, but we are competent as well, Rabicini said. The reportedly super-fast trading platform was designed in partnership with NASDAQ, focusing on order execution, and will integrate with its current applications. Additionally, Rabicini noted that this decision is about technology, not being able to price the market at the right time. You can say the volume has been weak, there will be few orders, but we see this market is systematically growing over time, and our long-term view is not just focused on price, but also technology, Rabicini said.
Well said, Rabicini.
Indeed, indeed. I think it's good to see that he's expressing that attitude. Maybe it's not truthful and it is about money to him. Actions always speak louder than words, but we will just have to see.
I guess it's both. I mean, the way it boils down is, it's similar to, the real world in the sense that, at least in business, right? When you focus on the money, you lose it because that becomes your primary objective and your primary goal. Whereas if you focus on what actually brings you the money, and more so, not so much that aspect of it, but like, for example, the customer, or whatever service you're providing, or if it's your passion, like when you focus on that, you are just naturally rewarded,
Right.
by the market. And
Mhm.
so it becomes a byproduct versus actually being your direct desire. And there is a huge difference in that sense. Now, yes, we're all money motivated to an extent because that's just how the world is. But generally speaking, it is good advice to kind of follow suit with either the passion or the objective, and the market will reward you, accordingly.
100%.
Um, Also worth noting that this is huge, right? Because not only is it Brazil's largest, firm, which Brazil has a population of 214 million people, and XP has 3 million active customers. So that's not accounts, that's active customers. And they have 130 billion in custody. So you're talking about a good amount of users, coming into crypto,
Right.
um, which is huge, right? And Latin America is definitely one of the most important continents that I think really would benefit from crypto. So it's really nice to see this. Um, and given Brazil's population, it could, kind of encourage other Latin American countries to start looking into adoption or just integration at this point.
For sure. I definitely think it's a good move, and we'll slowly start seeing these kind of more trusted institutions move on with allowing the trading of Bitcoin, or integrating Bitcoin in some sort of way. Like we saw BlackRock is integrating Bitcoin in some way now. I don't remember exactly how it is. Perhaps it's something that users can add to their portfolio. But we're really starting to see these huge, trusted, insured institutions get on board.
Yep, and that's exactly what we need to push us into the next cycle.
Right. Yep, totally agree. Let's see. So, crypto firm FTX gets warning from FDIC to stop misleading consumers about deposit protection. So FTX, the crypto exchange controlled by Sam Bankman-Fried, received a cease and desist warning on Friday from the Federal Deposit Insurance Corporation, telling the company to stop misleading consumers about the insurance status of their funds. The FDIC issued letters to 5 crypto companies, including FTX US. Unlike deposits held at U.S. banks, cryptocurrencies stored with brokerages are not protected by the U.S. government. Based upon evidence collected by the FDIC, each of these companies made false representations, including on their websites and social media accounts, stating or suggesting that certain crypto-related products are FDIC insured or that stocks held in brokerage accounts are FDIC insured, the regulator said in a press release. And in addition to FTX US, the FDIC notified CryptoNews.com, CryptoSEC.info, SmartAsset.com, and FDICCrypto.com. The FDIC said the companies must take immediate corrective action to address their false sense or misleading. The FDIC said the companies must take immediate corrective action to address these false or misleading statements. The agency said knowingly misrepresenting or implying that an uninsured product is FDIC insured is prohibited by the Federal Deposit Insurance Act. In the letter specifically to FTX, the FDIC said it appeared that on July 20th, Brett Harrison, the president of FTX.US, published a tweet stating that direct deposits from employers are stored in FDIC-insured accounts in the user's name. Harrison tweeted on Friday that he deleted that post and didn't mean to indicate that crypto assets stored in FTX are insured by the FDIC, but rather USD deposits from employers were held at insured banks. We really didn't mean to mislead anyone, and we didn't suggest that FTX US itself or that crypto/non-fiat assets benefit from FDIC insurance, Harrison wrote. FTX.US is a U.S. cryptocurrency exchange owned by FTX, which is based in the Bahamas and has been largely focused on building its business outside of the U.S. The FDIC also said that the website for Smart Asset and Crypto SEC identify FTX as an FDIC-insured cryptocurrency exchange. So I don't know. I see where they're both coming from. You know, based on the tweet by, let's see, is it Brett Harrison? Yes, based on the tweet by Brett Harrison. You know, he's saying that direct deposits from users' employers are FDIC insured, which appears to be true. You know, I also understand how to the average retail trader, they might take that and apply it to other avenues of FTX, even though that is not what Brett explicitly said. But I also think that a cease and desist letter is a good way to go about it, rather than just pursuing with charges or a suit right off the bat. You know, they're just telling them, hey, stop this.
Yeah. I mean, you have to be, especially with crypto, you have to be so careful with your word choice. Like, you cannot leave anything to interpretation.
100%.
So I understand both sides. Side note, I did not know that FTX was based in the Bahamas. That's hilarious.
Yeah, me neither. I mean, it makes sense. You know, a lot of these massive crypto companies are in some of those regulatorily flimsy countries.
I mean, and it's a shame because if you think about, you know, the U.S. almost actively deters corporations to be set up in the U.S. Right? And it's a shame because if it wasn't such, for lack of a better term, like a toxic place to, you know, have a company out of, then there would be so much. The country would be much healthier. Like you can imagine the kind of like taxes that a company like FTX would bring into the country,
right?
And use properly. But I mean, they get taxed like crazy, and it's insane. They're almost left with no choice. Like if you want to survive, you have to, you know, go offshore.
I know.
So,
and like, you know, trying to do everything legally is just like stepping on glass.
Well, yeah, it's walking on eggshells and it's jumping through hoops and it's blindfolded. Like it's crazy. It's absolutely crazy. So I don't know. They definitely need to change that. You know, their policies and how they govern and tax businesses, because it's just driving, you know, dollars out of the country.
For sure. Yeah. So on to our next story here. Hackers steal crypto from Bitcoin ATMs by exploiting the zero-day bug. For those that don't know, a zero-day bug is something that has not been brought to the light that a hacker's found. So when someone finds a bug, until it is used, it's a zero-day bug. Because once it's used, you know, developers can see what's happening. But until that happens, it's extremely dangerous because no one knows the bug exists except for the hacker. So hackers have exploited a zero-day vulnerability in General Byte's Bitcoin ATM servers to steal cryptocurrency from customers. When customers would deposit or purchase cryptocurrency via the ATM, the funds would instead be siphoned off by the hackers. General Bytes is the manufacturer of Bitcoin ATMs that, depending on the product, allow people to purchase or sell over 40 different cryptocurrencies. The Bitcoin ATMs are controlled by a remote crypto application server, also known as a CAS, which manages the ATM's operation, what cryptocurrencies are supported, and executes the purchase and sale of cryptocurrency on exchanges. So yesterday, Bleeping Computer was contacted by General Byte's customer who told us that hackers were stealing Bitcoin from their ATMs. According to a General Byte security advisory published on August 18th, the attacks were conducted using a zero-day vulnerability in the company's crypto application server. The attacker was able to create an admin user remotely via CAS administrative interface via a URL call on the page that is used for the default installation on the server, and creating the first administration user, reached the General Bytes advisory. This vulnerability has been present in the CAS software since version 2020-1208. General Bytes believes that the threat actors scanned the internet for exposed servers running on TCP ports 7777 or 443, including servers hosted on DigitalOcean and General Bytes' own cloud service. The threat actors then exploited the bug to add a default admin user named GB to the CAS and modified the buy and sell crypto settings, and invalid payment address to use a cryptocurrency wallet under the hacker's control. Once the threat actors modified these settings, any cryptocurrency received by CAS was forwarded to the hackers instead. Two-way ATMs started to forward coins to the attacker's wallet when customers sent coins to ATM, explains the security advisory. General Bytes is warning customers not to operate their Bitcoin ATMs until they have applied 2 server patch releases on their servers. They also provided a checklist of steps to perform on the devices before they are put back into service. It is important to remember that the threat actors would not have been able to perform these attacks if the servers were firewalled only to allow connections from trusted IP addresses. Therefore, it is vital to configure firewalls only to allow access to the crypto application server from a trusted IP address, such as from the ATM's location or the customer's office. According to information provided by Binary Edge, there are currently 18 General Bytes crypto application servers still exposed to the internet, while the majority located in Canada. It is unclear how many servers were breached using this vulnerability and how much cryptocurrency was stolen. Bleeping Computer contacted General Bytes yesterday with further questions about the attack, but did not receive a response. So essentially, it seems like these hackers got into the configuration of these Bitcoin ATMs, and when a user would deposit their Bitcoin, the hackers changed it. So instead of sending it to an exchange and returning cash, it just sent it to a wallet that the hackers have control of.
Nothing is safe.
Right. Yeah.
It's crazy. And I know so many people who use, Bitcoin ATM, especially in other countries, mainly in Europe. I think they're a little less popular here in the States, but we do still have them.
Mm-hmm.
But that is just crazy, though.
Yeah, no, it is crazy. Yeah, I'm sure this company is really big, and for them to not have a firewall as simple as only allowing trusted IP addresses, that's not a great look. I know that that's pretty much general practice when you're dealing with, information as sensitive as this. Of course, I'm not a cybersecurity expert, but even I know that you should only allow.
Yeah, that's your first step,
right,
in any kind of security, period. So that's a huge oversight on their part.
Yep. You got to pull it together, General Bytes. Alright, so getting on to the next story here. Brazilian local government chief and Bitcoin pharaoh suspected of crypto-powered money laundering. Brazilian law enforcement agencies have swooped on the home of a local government chief they suspect of heading a crime ring that laundered money using crypto assets, along with a controversial figure named the Bitcoin pharaoh. The raid took place at the home of Armacao de Buzios. Definitely butchered that, but that name is on the screen right here. Councilman Lorem Gomes da Silveira, Globo reported, and saw officers confiscate over $9,250 in cash. Multiple agencies were involved in the raid, including Rio de Janeiro's state ministry-run Specialized Action Group for the Combat of Organized Crime. The agencies, as well as public prosecutors, believe that the councilman headed a criminal organization that oversaw large-scale corruption, making use of false documents. The organization, the agencies say, saw the councilman make use of crypto as a tool of embezzlement. Lorem is in his third term as councillor of Armacao de Buzios, a position he was first elected to in 2009. From November 2018 to May 2019, he served as chief of staff to the city's mayor, and it was in this period the ministry says that the crimes were committed. 2 other men were also investigated in conjunction with the same alleged crimes: Gladson Acacio de Santos, known as the Bitcoin Pharaoh, and Carlos Alexandre de Silva. Officers appeared to believe that Lorem accepted cash payments in exchange for granting Armacao de Buzios-based individuals licenses and favors, and he allegedly had the Pharaoh and de Silva convert the cash into crypto in a bid to hide the funds. The ministry says that Lorem has now been suspended from carrying out public duties. The ministry began its investigations into suspected money laundering violations in April last year and suspects that other City Hall employees may have participated in the criminal organization. The judiciary, meanwhile, has determined that around $271,000 worth of Lorem's assets that are unaccounted for and may be hidden away in crypto wallets they have not yet gained access to. The pharaoh was jailed last year and is awaiting trial on charges of orchestrating a $7 billion crypto-themed Ponzi scheme that allegedly promised investors 10% return on their stakes. Earlier this month, FDR reported the pharaoh declared his intention to run for election from prison as a candidate for the Christian Democratic Party in October's general election. If this dude's awaiting trial on charges of orchestrating a $7 billion crypto-themed Ponzi scheme, I'm not sure if running for president from prison is the best look.
That is only in Brazil.
Right. Like what? That must have been the market cap of whatever they were talking about. Maybe it was UST or something.
That's huge.
I don't know. Yeah. Trying to think of what that could possibly be, because that is massive.
Wow.
Yeah, I mean, it could have been UST or a similar stablecoin, promising 10% returns on their stakes.
It's got to be something like that. That's crazy.
Right. But, it sounds like if the allegations are true, this government official was rather corrupt, accepting payments for licenses and other governmental actions. So, hopefully they can figure out what exactly happened and act accordingly. Yeah, I think it's cool to see justice coming to some of the bad actors.
Man, I mean, only so much, because at the end of the day, this guy's running while in prison.
Right.
I mean, yeah, that's crazy.
Yeah.
That's, he probably has whatever he wants in that prison, I guarantee you.
For sure. Yeah, there's quite the difference between a poor man's prison and a rich man's prison.
Absolutely.
Especially in Brazil, I'm sure.
Yeah, especially if you've got $7 billion worth of stolen funds.
Right. But, yeah, I guess we'll see what happens here. Hopefully they can get to the bottom of what exactly has gone down. But we'll get on to the next story here, talking about Ethereum's merge. So the Garelli testnet, Ethereum's third and final testnet merge before the blockchain transition to proof of stake from its current proof of work mechanism, has ostensibly been successful. The merge was executed today around 1:45 UTC. The testnet merge saw Garelli testnet merge with the Prater testnet, a POS beacon chain, and represents the final test run before the actual merge takes place. So the merge is Ethereum's much anticipated upgrade when the current Ethereum mainnet will merge with the beacon chain POS system. The two previous testnet merges, Ropsten and Sepolia, were largely successful, and Garelli seems to be successful too. So Christine Kim right here tweets that a successful merge equals chain finalizes. Sure, participation rate dropped and looks like there may have been an issue with one of the clients, but the merge worked. We'll likely see minor issues like this with the upgrade on mainnet too, but the point is the merge worked. So the probability that the merge will happen next month just went up considerably, in my opinion. Lucas Nuzzi, head of R&D at crypto intelligence firm CoinMetrics, has said. However, the Garelli testnet merge was not quite seamless. Ethereum developer Marius van der Wisden said the developers didn't finalize on Garelli earlier because there was some confusion on the network because two of the different terminal blocks and lots of non-updated nodes. However, he added that so far it looks quite good. When asked about 2 terminal blocks and how it could have affected the merge if it was mainnet instead of testnet, Wisden said theoretically this could have happened and they have code to handle 2 terminal blocks. He also said the merge would have been successful if this was the mainnet. So according to the Ethereum Foundation, the Gorelli merge is the final opportunity for users to ensure that their POS validators are configured correctly before the mainnet transition. Yeah, so there are going to be some slight changes that service providers will have to make after the transition from proof of work to proof of stake. But you know, it's good to see things moving along. This has been something that's been talked about and delayed over and over and over, and it seems like we are finally getting close to it. I think it'll be really interesting to see how it plays out technically, rather than, you know, all the buzz around it. Everyone talks about ETH2 and the merge and all this, but you know, in 3 years from now, where are we going to be?
Exactly. And you're right, it does keep getting delayed. I don't think people really fully understand how, you know, how much work goes into pushing the envelope, especially in crypto, because everything's still so new.
Right.
So you're kind of figuring things out as you go, and you run into lots of bugs and issues like that. So, you know, truth be told, I was actually not anticipating the merge happening this year.
Right.
I think I mentioned in another, you know, episode way back when that they were just going to keep delaying it because they were going to run into more and more issues, at least into quarter 4. But it looks like they're moving, you know, much better than I anticipated. So kudos to them.
Right, and I totally agree. You know, I saw Vitalik talking about wanting it to happen in fall of this year, you know, and from my perspective is the boy who cried wolf. You know, we've heard so many times that the ETH merge is going to happen here, it's going to happen here, it's going to happen here, and so I just took that with a grain of salt, but it looks like things are actually moving forward, which is pretty cool to see. But like I said, I am more interested in how this will technically play out. Yeah, because, you know, I mean, ETH is surely not a crypto that I'm in for short-term gains. I believe that it will really succeed in the long term. You know, maybe it'll have a rival that comes up closely to it, but as of right now, there's nothing quite like it as far as I'm aware.
Yeah, I agree, and I also think that the proof of stake is what's going to allow ETH to eventually overtake Bitcoin as far as market cap, if anybody's going to do it.
Yeah.
It isn't something that's going to happen a month after the merge, right? Like you said, in a 2-3 year time span, that might play out like that. And there will be people, you know, there will be forks and different chains. But again, I said it in a previous podcast that a lot of these forks and chains, they don't offer much value. Usually it's just like, okay, faster, you know, transaction speeds, lower gas,
Right.
and more confirmations per block. Like, cool, but what incentivizes me to switch over my funds to your, you know, to your chain?
Right, and I mean, another thing is too, you know, like some of these new chains come out and they're like, oh, it's so fast and gas fees are so cheap, yada yada yada. That's because it's so new and there's not so many users.
Exactly.
Yeah, I mean, Ethereum is probably the most popular blockchain, if not, I mean, not counting Bitcoin, just solely talking about a smart contract compatible blockchain.
Oh yeah, easily. I mean, it certainly does more volume, in my opinion. And again, it's a value proposition, and I don't think anybody has really cracked the code yet as far as how to get people to switch over long term, because the value proposition is not there.
Right.
And so, I don't foresee anybody competing or overtaking ETH in a very long time.
For sure. But yeah, so we'll get on to the story here, talking about Uniswap blacklisting crypto wallets. So over the last 4 months, Uniswap blocked more than 250 addresses linked to various illegal activities. The information was revealed by Jordan Frankfurt, a software developer with Uniswap, who published logs from the platform's servers detailing censorship activities on the decentralized exchange on GitHub. So blocked addresses connected to Tornado Cash. According to the logs, most blocked addresses were linked to crypto mixers, including Tornado Cash, which the U.S. Treasury recently sanctioned for aiding and abetting money laundering. Others were linked to a slew of illegal activities, including falling afoul of Office of Foreign Assets Control sanctions or being part of a crypto scam. Some addresses were also blacklisted for merely being associated with wallets directly connected to bad faith actors. In April, Uniswap and other major crypto exchanges and DeFi protocols started blocking crypto addresses linked to illegal behavior from their front-end services. To do this, Uniswap's main developer, Uniswap Labs, entered into a partnership with the blockchain analysis firm TRM Labs. The crypto security company flags wallets suspected of links to illegal behavior on behalf of Uniswap. According to a graphic posted on GitHub, TRM Labs looks for 7 types of risk factors while checking addresses: stolen funds, funds from crypto mixers, sanctioned addresses, and monies from known crypto frauds are the 4 main categories that are frequently detected. The 3 main remaining categories include money used to finance terrorism, money from recognized hacking groups such as Ryuk and Lazarus, and materials involving the sexual abuse of minors. While Jordan Frankfurt shared the information on blacklisted addresses as a show of transparency on Uniswap's part, it appears the data was not meant for the public and was deleted shortly after that. However, an eagle-eyed Yearn Finance developer, going by the social media moniker at Bantag, took a screenshot of Frankfurt's post and published it on Twitter. In his post, Frankfurt, who stated that he was responsible for writing the front-end and back-end implementations of Uniswap's TRM code, admitted that the system was doxing Uniswap's U.S. customers. However, he also acknowledged that Uniswap needed to obey the law by not offering crypto services to sanctioned individuals and addresses. According to him, Uniswap initially blocked not only sanctioned addresses, but also addresses that were counterparties to them. But he pointed out that Uniswap has since scaled back on the practice and now only blocks sanctioned addresses or wallets that are direct recipients of stolen, fraudulent, or hacked funds. Frankfurt further said that overcompliance by crypto firms with recent government restrictions were causing a lot of innocent users to be incorrectly banned. An analysis of the Uniswap data at Banteg lends credence to Frankfurt's assertion. According to him, at least 30 of the 253 banned addresses appear to have associated ENS names, meaning that they were most likely legitimate Uniswap users that may have fallen victim to TRM's overzealousness. In contrast to those seemingly innocent addresses, some wallets appear in every risk category on TRM's watch list. So, I think that Uniswap blacklisting these fraudulent addresses, in particular the ones associated with Tornado Cash, is a good thing, just because hypothetically speaking, if you have an address that has received 1,000 ETH from Tornado Cash and you dump that into a Uniswap liquidity pool and you cash out, get USDC, now all of that ETH in that liquidity pool is tainted.
Yes.
That could be a extremely sticky situation.
For Uniswap, yeah. For sure.
Even for just people that have their ETH in DeFi, if you can't sell your ETH for USDC or whatever.
Yeah, the whole thing is crazy. I'm torn on it because I get that perspective and I agree with it. At the same time, I really don't like the feeling that there is centralization behind Uniswap. It's one of those things, like, I would much rather them not be able to do this. Just because like when I first read the story, I was like, I mean, obviously, you know, I think most people's reactions were like, hey, let me check and make sure my address is not on there.
Right.
And that goes to show you that, you know, we're not all hackers or scammers. But we actually understand that there's some risk associated with using DeFi protocols, and the fact that we all felt the need to check for our own wallet in case it's on there goes to show you how little trust we have in the current system.
Right.
That we would think that, hey, maybe my wallet's on there by accident. Just like how they pointed out in the article that there appears to be, you know, some users that fell victim to TRM, and they're probably unjustly on that list.
Right.
So, you know, there's that aspect of it that I just do not like. But on the flip side, I definitely understand, you know, the situation at large, and it was the correct decision for them. That's what they needed to do, but it definitely is like, you know, it's also kind of gut wrenching at the same time.
Right. You know, while typically, you know, if a wallet receives funds from a fraudulent wallet, generally speaking, sure, that could be them paying themselves or other bad actors, but at the same time, you know, you don't have to give permission to a wallet to send you money. So, you know, like, who's to say that the Lazarus hacking group won't send 100 ETH to, I don't know, like Obama's wallet or something, and all of a sudden, like, Obama's involved with a sanctioned address, and, you know, I mean, he didn't do anything to get it. He simply just had the wallet, and this, you know, team of hackers and fraudulent users sent dirty money to Obama, and he had no control over it.
Yep, and this is the tactic that they use as well to kind of like prove that the system is flawed.
Right.
Because I mean, you know, and to catch some people up, because we haven't covered it, but Tornado Cash was sanctioned in the U.S. I think it was 2 weeks ago, right?
2 or 3.
Yeah. We may have covered it the last episode. We may not have. But it's sanctioned, so you can no longer use it. And so that's kind of where this all stems from. And one, you know, there were some people on Twitter that, in an act of defiance, they were sending, you know, funds. They were sending ETH from Tornado Cash to public addresses of like well-known celebrities and
Right.
you know, influencers and stuff like that. And so, you know, at that point, you know, those wallet addresses are also, you know, flagged, and at that point it's just, you know, that's how they show their defiance. They're like, you know, you can't really know who's doing what, just because you trace Tornado Cash to their wallet, right?
Totally. Yep. I don't know. I'm sure we'll start seeing some case law around such an issue relatively soon. You know, with the pushing of the sanctions, you know, naturally, I'm sure people will get indicted, and we'll see how that plays out in court.
Definitely. I mean, it'll be interesting, surely. It reminds me similar. I remember reading this one story of this guy who apparently does a lot of trading and volume through, I want to say smart contracts. I don't want to say Uniswap because I don't know if it was BSC or Ethereum. But what he does is, before tax season, I guess he does like a ton, like a metric ton of transactions.
Yes.
I think I sent you the story actually like a long time ago.
Yeah.
And he prints out every single transaction, and it costs him, I want to say, do you remember the exact number? I think he said it was between 11 and 20,000 US dollars worth of transactions and printing all the papers. I mean, he ends up shipping a massive box to the IRS, and he's like, here are all my transactions, go through it,
Right.
and validate, you know, what I'm claiming is true. Just to like mess with the IRS,
Mm-hmm.
you know, again, a retaliation stand.
Right. Well, They just hired 87,000 new IRS agents.
Probably because of him. So, and it goes to show you, like, you know, it's a double-edged sword. It really is, because at the same time, you know, they just hired 87,000 workers, the IRS, but who are they targeting? They are not targeting the multi-million and billion-dollar corporations that are laundering money
Sure.
and not paying their fair share of taxes. They literally, you know, they posted a video the other day on Twitter of like an IRS training course where they're going over the fact that they're going after this small business owner who's selling his landscaping company, and he has two sets of books. So one that he, you know, uses to pay his taxes on, and then his real books, I guess.
Right.
Which books are just like your profit and loss statements in a general sense of your business.
Right.
And so he's selling his business online on like some Craigslist, Facebook type of place. And so they call him up and they record the conversation and they ask him about his books, and you know, he reveals that he has two, and he'll go over with the potential buyer, although the potential buyer is the IRS.
Right.
And so this is what they're spending these 8,700, you know, workers on, is not going after the big fish. They're going after the little guy that is trying to compete with the big fish and trying to survive.
Yeah.
So it's kind of like it's double-edged, but it's also really like messed up, because you know, it's just unjust.
For sure. Yeah. I don't know. I feel like pay your taxes and you'll be fine. You know, I mean, it sucks for sure, but yeah, the IRS will give you a run for your money.
They will, especially if you're poor.
Right.
They love to go after you if you're poor.
Oh, I know.
It's annoying. But again, I'm curious to see if more people will take that stance, right? Or that approach, that defiant approach, because right. I mean, I'm personally one to kind of enjoy seeing that, just like the little guy stand up for himself. Sure. So hey.
Yeah. Well, that just about wraps up all of our stories here. Let me go ahead and pull up the CoinScan website. We can kind of talk about some things that we've had going on recently. So
yes, we have been working very hard in the background.
Indeed. So yeah, we've been having updates probably about every other day, getting closer to every week now. But I mean, as you can see, the full version of CoinScan is up and running for the most part. There are some features that are not working properly quite yet. It depends on the tokens. We've still got plenty of work to do, of course, but right here you can see the holders. Distribution is working. You can see which addresses hold which amount of supply. And of course, shortly coming up, you'll be able to see what these holders bought for, what they sold for, things like that. Safety checks are up and running. You know, I mean, we are the first charting platform on ERC to offer charts at 30 seconds and 15 seconds. Sometimes it likes to give us issues if there's not so much volume. But yeah, we are smooth sailing. We should have pending transactions by the end of this week, as well as a lot of this data in here being filled up properly. But yeah, some super exciting cutting edge things going on over here at CoinScan. Make sure that you are in our different communities so that you can stay up to date with all that is happening. We like to keep things rather spicy here. But that wraps up this episode of the Crypto Club. Thank you all for tuning in, and we will see you next week.
See you later.